Hey everybody, good morning. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com, and Happy New Year. Again, New Year's Eve today. Markets will likely be a little bit quieter today, although in all fairness, we thought that the last few days, and it's actually been pretty remarkable to see the selling pressure in the markets. Now today, we are seeing the markets floating up, so it does appear that we were likely or on pace to have an up day in the markets to end this robust year of upside across the board in the indices. All right, so we're going to take a look at that. We also want to look at some bigger forecast levels. I want to look at the dollar yen. I want to look at gold, silver, as well as oil. We'll look at the S&P and the NASDAQ and just see where they could go in 2025. All right, so let's start out by looking at the S&P in the pre-market here. And again, remember yesterday I came to you guys and we were seeing some pretty significant downside. That downside continued. This was pre-market yesterday. Here's where the markets opened right here yesterday. We had additional selling, and then the faucet was shut off right around 10:30 a.m. Eastern time. Now, that's something that I've talked to you guys about many times, how it seems like institutions are unloading when there's volume in the market, and then they shut the spigot off pretty much in that first hour once volume starts to get lighter, and then the retail investor takes over. We saw this gentle float up, and then a little bit of selling, maybe a little profit taking into the end of the day. Markets closed yesterday right here, and this is where we're currently trading, right? So again, you can see that there is a positive bias to the S&P here this morning. Not a big one, but again, a gentle float to the upside on very light volume here to end 2024. Quite a year it's been. I do want to just say this, folks, is going into 2025, I expect far more volatility. We've seen pockets of volatility, right? Recently, a little bit of volatility. August of 2024, we saw that major spike in volatility. But for the most part, volatility has maintained a very low level historically, and I do think that ends in 2025, so hold on to your hats. But on a positive side, that gives us as swing traders, as traders, those of you that are tuning in because you want to be more active in the markets, that's going to give us a lot more profitable opportunities to trade crypto, stocks, commodities, and even Forex. All right, here's your S&P chart. Again, yesterday we saw the pullback here. This was yesterday's daily candle. Again, notice this area right here. So we were inside of these two lines. We broke below, we retraced to the scene of the crime, and we got rejected, and the markets came down. Now, it looks like we're bouncing a little bit today off of this level, but I want to show you something really fascinating. In fact, this is something that I saw in the charts, I think it was late last night when I was just analyzing on my laptop in bed. And notice how this line and this line are not parallel, right? This one's upsloping. These are kind of getting tighter and tighter together. Now let's just do something. Let's do an experiment. What if we take this line here, and I'm going to go over to the computer and do it, but let's connect it to this low right here. I want to see what happens to that line. So let's go over here and do that right now. So if we look at the chart here, we can take this line and bring it down right there. Now, if you're like me and you start to say, wait a minute, that line now looks perfectly parallel to that lower line, which, by the way, is actually this low to this low right here. Let's put an arrow in there and right to there. Isn't that cool? So again, these are the little things that kind of make me say, wow, and I'll go back to the big chart to kind of show it, but it's just amazing to see how these parallels just naturally create bounces. Like, for instance, looking at this low here, right? It's not at this gap fill. It was below right here. So it's kind of in between those levels. I guess you could say it's right in that range. But the point being is that there's some force subconsciously in the markets that just naturally says, okay, here's a major trend line, this one right here, right? And the natural parallel from this low, which was your August low, and we know the August low was a major low, massive volume, huge collapse in such a short time. What's the parallel to this one with that low? Right there and right there. So what does that tell us? Well, it tells us that this is now the next level to beat to see downside in the markets. So we could continue to float in theory like this, but whenever this line breaks, that's where you get your next big fall. So just something that I'm going to be watching in 2025 with that parallel right there. All right. So let's go back to the S&P 500 here, and let's actually go to this daily chart of the S&P. I want to erase these lines, and what I want to do now is just go to a bigger time frame and take a bigger view. So when I forecast, and just to be clear, when I'm forecasting the markets out for a full year or more, I don't want to focus on the short term, because the short term really is going to guide you to what's the next move in the next week, in the next couple days, maybe in the next month. When you're looking 12 months out, you got to look at the bigger picture. And now if we look at this chart, the first thing that jumps out to me is that this SPY, this was your .com high, and this was your 2007 high before the Great Recession. Look at the vertical nature of this market. Now again, from this point right here, the market saw major stimulus, not only from the government spending, and we know where the U.S. debt is right now, but also from the Federal Reserve, right? The Federal Reserve just pumping quantitative easing into the market. And then finally, obviously, the one pullback we had right here was when they started to talk about tightening rates, and they tightened rates. And then since that, we've just ripped higher even more. But my point being is that when you look at this chart, right, this was a bubble. This was a bubble. What the heck is this? I mean, is this the bubble to end all bubbles? Again, where does it end? We don't know. But what I do like to do is I do like to use a log chart. So let's go to the S&P 500 here, SPX. I want to just bring up another chart of this here. And what we can do is we bring up our logarithmic view. And I want to get rid of all these little trend lines and stuff in here as we get rid of all that. These are all shorter term lines. But again, as we get rid of that, this is something that catches my eye. The logarithmic S&P 500 going back to 1929. All right, so again, in 1929, the S&P we're literally talking like in the 30s. It was 30s. But what we do have to be concerned about is that you take that major top in 29, the Great Depression or pre-Great Depression, the dot-com high right there, and lo and behold, what are we hammering on right here? In fact, I think this is where I came with one of the factors of why I said to you guys, one of my upside targets on the S&P was right around 6,100, as because that was essentially a hit of that trend line. So again, what this tells me as a forecaster, it tells me that we're in this danger zone. It doesn't mean that you're going to roll over like the first of the year or the first month of the year. But what it tells me is that the 2025 year should be pivotal in terms of being into this level. It may start some sort of bigger downtrend like we saw off the dot-com high, or God forbid, we saw in the Great Depression type thing. And so this is where, as I'm formulating my 2025 plan, I start to say to myself, and this is something I formulated even before 2024, all right, let me start accumulating safety assets. Now, certainly gold performed well, up 26% on the year, basically rivaling the S&P. So my gold holdings did fantastically well, but most people would say, well, gold, you might make 5% a year. Blah, blah, blah. To me, when I'm looking at a chart like this and the outcomes of here and here, I'm actually okay with smaller returns. Granted, gold gave us a much bigger return this year, but when it can save you from seeing some sort of like 50, 60, 70% correction or collapse in a market, it's much better to make a small amount and be protected versus having the vulnerabilities of what some of these charts are telling us. And again, this chart is not alone. We know that on the NASDAQ 100, if you go to the monthly chart on the NASDAQ 100 or even the weekly chart here, this chart is also, now this one, by the way, is just your regular chart. It's not even your logarithmic chart. This is just your regular chart, and it only goes back to 2020, so it only goes back about 4 years. But the idea being is that here again, and one of the things that I do in trading, right, and this can be a stock, commodity, crypto, doesn't matter, is you, as a trader, a technician, you want to align factors, right? The more factors, the more it should be an alarm bell to something going on. And so what we have here on this chart is that we know we already looked at the S&P chart, which on the log chart is at the top of the trend line that goes to the 1929 to 2000 bubble highs. Remember, there's not a lot of major bubbles in the entire market. You could say the dot-com bubble was probably the last major bubble. In 2007, it was probably a housing bubble, but not a stock market specific bubble. And I think that's important. So that really, I wouldn't look at that and say, oh, it was a bubble in a different asset class, but not in the stock stock bubble. But in 1929, you had some of the same reckless behavior that you're seeing in today's market. Very similar, very, very similar. Easy money, liquidity in the system, crazy margin, all these different things. I mean, again, you can look into it in history and go online and so forth. But my point being is that here on this chart, the confluence is the 2020 low with this low right here, with the bull market high of 2021, right? And this is the 22 bear market low. This is the 20 COVID low. And here we are just off of that. So again, these are just things that as a forecaster, I have to pay attention to. And it doesn't mean, by the way, that I take my whole portfolio and I say, hey, listen, I'm going to put it all short the market, or I'm going to, take it all out of the market and put it in gold, for instance. No, it's all about allocation. But am I in a more conservative allocation now than I might have been years ago? Heck yeah, I am. No doubt about it. And again, I think smart money is. I mean, look at Warren Buffett, right? Warren Buffett, one of the greatest investors of all time, he has $300+ billion in cash that he's just having on the sidelines. Now, the nice thing about that is while it's on the sidelines, he's still making 3, 4, 5% via money markets or wherever he's putting that money. So it's not like it's not making a return, but it's a safe return while he awaits a situation like the financial crisis in 08, 09. And by the way, I still remember vividly when Goldman Sachs was about to fail in 2009, or maybe it was late 2008. It was right around Lehman. And they basically begged Warren Buffett to step in, and he did with Goldman, and he got one of the sweetest deals. Like, he got guaranteed X amount of preferred stock with payment. I mean, it was just one of the most incredible deals. And my point of bringing that up is that when there's panic and people are borderline financial collapsing, that's when you get some of your best deals. And remember, when there's blood in the street, as they say on Wall Street, that's when we have to be buyers. When there's greed and you're at multi-epic, highs, and you're seeing, Rigetti and Soundhound and, all these other kind of crap stocks, FFIE ran yesterday, crazy. That's actually when you have to be like, whoa, it's pure. So investing should not be pure gambling. Right? And that's the whole idea of technical analysis, is that it's probability based. So once you see that all out gambling, like altcoins in 2021, stuff like that, and even recently, that's where you have to, as an investor, not get caught up in the hype and say, oh, I got to jump in. Everyone's telling me on social media to jump in. You have to step back and say, wait a minute, this is a warning sign. I remember seeing this in the last cycle, in the last 5 cycles. When this happens, we're getting close to the end of the move, and be careful. All right. So again, just going into these type of things for forecasting today in terms of markets. To the 10-year, again, the 10-year yield, here's the 10-year yield. I have it max upside would be 5%. Remember the measured move I showed you, which is super, super cool. I showed you guys this last week. So here's 2 trend lines, right? And they're converging. We talked about multiple factors. So 5% would be huge resistance. But also if you take this low here to this high, so this move up, and we just extrapolate that out, right? And we take that to this low, look, it literally matches the exact same distance would be there. So now my point being is that we don't know if we'll go to 5%, but if we go to 5% on the 10-year, that would be a huge shortable level for us as traders, right? And so again, a trader would be really looking to pound the pavement there on the short side of the 10-year yield. Now, how do you short that? Well, for me at least, and I can only speak for myself, but I buy TLT. So if I see that, I will be loading up on TLT, expecting a pullback. Now, having said that, if we look at the 10-year, and let's go to this bigger board here, the forecasts, all the forecasts that I'm seeing are telling me that inflation rising, all right, means less Fed cuts, potential government spending slowdown, whether the DOGE, Department of Government Efficiency, does it or not. The likelihood is there'll be some cutbacks, which will slow spending, so that's less stimulus into the economy. Those factors should slow the economy in 2025, and that will eventually make the 10-year roll over, right? So again, eventually as the economy slows. Now, the question is, how low will we go in 2025? My worst case scenario would be right here. There's a major area around 3.25 to 3.3%, right? So that would be kind of my max downside in 2025, and I do think it's possible, but if I had to game it out, I would think there might be something like this, right? We go up here, and then we kind of, have this type of move eventually back down to those levels where, again, that tells us the economy is slowing enough where the Fed is going, even if inflation remains high. And by the way, inflation actually should start to come in a little bit. So even if it upticks right now because of the wealth effect and the competition for goods out there, eventually, if the economy weakens enough, people won't be spending this type of money and prices should come down. That also goes with the oil aspect of saying, all right, forecast short term maybe $73, $75, $78 a barrel, but by the end of 2025, I actually have a $50 handle priced in on crude oil to go to. And we can cover that chart. I don't think I'm going to cover it today because I'm running out of time already. But again, I can do more forecasting of these other things, inclusive of Bitcoin and so forth, into the Thursday video after the holiday. All right, so again, looking at this, looking at the 10-year, eventually a rollover there. One of the things I'm watching like a hawk in 2025 is the dollar yen. So the dollar yen has really become a major player here in what's going on. So we're seeing inflation rising in Japan. The Japanese central bank's going to have to continue to hike rates. So again, while most other central banks are cutting rates, the Japanese central bank is actually going to have to raise rates because inflation is getting so bad over there. Now, what I'm seeing here is a very interesting chart, right? You have this trend line here, right, through these lows. We broke down, we retraced to the scene of the crime, we fell, we retraced again, and then the question is, do these lines meet, and does price eventually hammer in there, and then does it fall at some point in the future, or does it break out? Again, remember, this is the dollar yen, so the lower this goes, it means, I believe, and I got to think about this real quick. So this is how many yen per dollar, right? So the dollar strengthens, this goes up. But if the yen strengthens, then this would actually fall. So if rates go up, you'd actually assume that we might see a pullback in the dollar yen to the downside. All right, so again, overall, this chart, the reason I'm bringing this to your attention is this was kind of the beginning catalyst for what ruffled the markets in July into August when we had the biggest market correction in 2024. And so we do want to pay attention to this, especially with the central bank there potentially raising rates. All right. Let's go to a couple other charts here, guys. I was just looking at JP Morgan to kind of price out where I thought the financials could go in 2026. To do that, I'm just flipping through the different time frames here, and you can see what an incredible run on JP Morgan just since 2022 lows. It was a $100 stock, and now it's at $250 or thereabouts. That is a huge, huge run on JP Morgan, especially for a financial. Financials don't usually run there. Now, one trend line I'm watching really closely is this one, okay? So for JP Morgan, technically as an investor, it's safe until this line breaks. So if we come back here, folks, and we take a look at this, we have a very obvious trend line from 2023 through the low here and through the low here and here. Now, right now it's above that level, so it's okay, but we do want to monitor if price comes into this level at around 225. If that breaks, that starts to cause major problems. And we do want to pay attention because we've seen regional banks, obviously, over the last couple of years have issues. But at some point, what is commercial real estate doing? I mean, where is that going in 2025? What kind of problems is that going to create? What about all the refinancing of U.S. debts? Now, granted, that's not necessarily a JP Morgan problem. That's more of a government problem and a taxpayer problem, unfortunately for us. But those are all things that we want to play into. And then ultimately, if the housing market starts to weaken and we see default rates, and that's something that I'm watching and I'm forecasting for, is that we've seen an uptick in default rates, credit cards, auto loans, even homes going into default or into foreclosure. Those are all starting to uptick more and more. And I do think as the economy weakens, we're going to see that continue to increase. And that actually could be a headwind for the financials as well. All right, let's get back to some other things here. I just want to go through Bitcoin real quick here. Bitcoin yesterday doing exactly what we talked about was the likely scenario, which is bouncing off the support here. Now, again, remember, as a trader, we just are monitoring this line, which is around 92,000, give or take, and this trend line, which is upsloping, currently sitting around 102,400 or so. But the point being is that you might go like this, like this, like this, like this, but then as of now, this is what type of pattern is this? It's a bear megaphone, essentially a bear flag, but we'll call it a megaphone because the two trend lines are diverging versus coming together. The idea being is as long as you can't take out this trend line here, then this is a bearish pattern. We know that MicroStrategies bought another 2,000 plus Bitcoin just in the last, I think, week or so. So they continue to buy. Dollar cost averaging up, not my favorite strategy, but again, I guess when you're really long term, it doesn't matter that much from Michael Saylor's point of view. If you break here at 102, at 92, you're likely headed to 74 to 75. That's where I will be waiting patiently to buy. If it doesn't get there, so be it. And then if it breaks above 108, you go to the high end of this. So this trend line is still resistance. And wherever that is, right now it's at 114 to 115, but again, we'll monitor that. But right now, bias, probability-wise, I always try to speak in those terms, it's favoring a slight negative bias, just a matter of does it break now or does it break into the new year. Natural gas pulling back today. Monster move yesterday. We day traded it in the Apex Live day trading room on the short side. We caught the high of the day. That was a great trade. Congratulations if you were in there. It was a fantastic, fantastic trade right there. I think I made a little over $5,000 on that trade alone. Today we're seeing a pullback on that one. And then silver and gold, you can see again, we've kind of talked about the price action. Here's your breakdown, bearish pattern, another breakdown starting, and I'm still eyeing this area right in here, somewhere around 27.50 as a downside target. Gold today, gold is flat to positive, hugging this trend line right here. Nothing new to report on that. And oil, as always, folks, again, I continue to be slightly bullish on oil. Oil is trading up again today with an upside short-term target that's nearing at $73 a barrel. All right, so listen. Let's see what the market does today, right? In general, right now, it's looking neutral to upside. Doesn't mean it's going to end that way, but usually if you looked at 100 days before New Year's or New Year's Eve trading days, I would say a majority of them are light volume and positive. So that's the probability. Again, it's all speaking in data points, and that's what we're looking for today. If it doesn't happen, then just like the last few days, in my opinion, it means something more significantly. Like when something that happens 80 times out of 100 doesn't happen, you have to say, wait, what is that telling us? Let's extrapolate that out. All right, next we're going to look at, and again, on Thursday in the game plan, remember we're closed tomorrow, so no game plan. But on Thursday, I will be forecasting more levels, including Bitcoin out into 2025, the end of 2025, as well as gold and other stocks as well. I want to look at NVIDIA's forecast, Tesla's forecast, and a lot of these other ones. So we're going to do a bunch of forecasting now. Don't forget January effect plays should start to be in place starting as early as tomorrow with tax loss selling over. Those are going to be key as well. All right, thanks so much for tuning in, guys. Thank you for your kind words, your comments, your support here for Verified Investing in 2024. Can't wait to talk to you all in 2025. Take care.